My next guest says while earnings will drop, they won't collapse. He believes the market will surprise to the upside in the first half of next year. Joining us is Andrew Slimmon. He's senior portfolio manager at Morgan Stanley Investment Management. And you're starting to go against the crowd a little bit here, Andrew. What makes you comfortable with this kind of optimism?
Well, it's optimism for the first half of the year. I'm not so sure I'm as optimistic on the second half. I just think the economy, the story of this year, one of the stories has been the economy has remained far more resilient than what many of the bears predicted. Earnings have come down, but they haven't collapsed. And I guess I'm a portfolio manager. I listen to companies and they're telling me things are not disastrous. There are, pockets like technology where you're starting to see a slowdown. But overall, I don't think we're going to see this big earnings collapse in the first quarter. And so I do expect the economy to continue to remain more resilient than what more than the first half, kind of collapse expects. I do think, however, as Rick has so well articulated, the yield curve is inverted, and that is a very good predictor that there is a slowdown out there. It's just not a very good predictor of when it will occur. And I suspect that eventually the economy will succumb to these tightening. It will just take longer than people or the bears expect.
All right, so we promised people that you might have some strategies. So we all go, great. It's just going to be a question of when and how bad the recession is. And yet, what do we dollar cost average into stocks? You think Lennar could be a name to own here? Pool Corp down 43% this year. K-Web? I mean, these are not, the safe stocks that might make people feel comfortable sleeping at night. Alibaba's on your list as well.
Sure. Yeah, well, you make your money buying low when things don't feel great. And when you're buying stocks that make you feel great, that's a danger sign. You know that, Kelly. So let's start with the housing stocks. Look, these stocks peaked long before the housing cycle turned down. They peaked when rates bottomed, mortgage rates bottomed. And as mortgage rates went up, they got clobbered, right? They have had a bear market. So if a stock's down 40 or 50%, you have to question, could things change? The point of this is, if rates were starting to come down, we're seeing the long end of the curve come down, mortgage rates could come down. We may be through the bear market for these stocks, even though the housing could turn lower. So that's my view on that. In terms of the K with China, look, this has been a disaster the last few years, and yet what gives me comfort is the dollar is breaking down. EM currencies are starting to rally, and you have a pivot in China from zero COVID to resuming their goals of common prosperity. I think China could be the best performing markets in the world in 2023, and that's coming off of a very short time ago where the belief was they were uninvested.